We're live. Guess what? It's Monday. The Dads in Business podcast is back. We are here with Norm, and I always mess his name up, DeLaura. Actually, I think I got that. I think I'm pretty good on getting these names now. Welcome back. It is Monday. Guess what? This podcast and then next week's podcast, we're done for season 2. We'll be back somewhere when it gets warm. When the weather starts to get warm, we'll be back. We're probably going to be doing some new formatting. I think we're going to do a quick redesign. I'd like to get the alerts out to you guys in a better, more efficient way instead of just posting. So we're going to figure all that out. So you'll see some really positive changes in next season. This is the second to last episode. We have Norm today. Norm, when I went through his stuff, do we have any housekeeping? I don't think so. Cornhole tournament, mid-March. See Bennett's post. Do not forget. We're going to the truck bar. I am the worst cornhole player, but I'm bringing a ringer. I'm totally bringing a ringer. So, all right, just to let you all know. So cornhole, check that event out. Don't forget our goal: $50,000 this year for Make-A-Wish and the Dream Fund. Brian Waddell is administering that. It is a fantastic charity. Last year we sent a sick girl out to swim with the dolphins. That was her wish. We accomplished that. Thank you to you all, to you guys who pulled that off. I am here with Norm DeLaura today. The AP, we'll talk about what that means in a minute. But he is a commercial and residential lending broker. I think that's the way to just kind of do it. He's going to correct me when we get in here. I'm sure he is. And he is the history of the way, he is the All-American. If there's anybody that's an All-American with all the things that he's done throughout, he followed that exact All-American path. I felt patriotic just reading about his stuff. I'll let him talk a little bit more about it, but amazing guy. Welcome to the show, my man.
Thanks for having me.
Bro, dude, I can't believe the stuff that I was reading, or rather finding. And I used a new tool. I don't know if you saw the image, but I used a new tool for ChatGPT called Deep Research.
How'd it go?
Dude. So halfway it worked, but the first part of it was it kind of made it up, but it was pretty close. It was really close, but I discounted it because I wasn't sure. It was kind of like embellishing your football career. It was really embellishing that because it didn't have enough information. So anyway, yeah. So welcome to the show, my man. Tell me what. So you are a broker for Supreme Lending. Go ahead.
So I'll tell you. So Supreme Lending that I work for is a non-bank lender. I'm what you call a producing branch manager. So I have my own branch. I do residential conforming and non-conforming loans through Supreme Lending. And then in a second life, I also own DeLaura Capital, which handles commercial financing, some of your non-QM fix and flips, your oddball kind of loans for investors, things of that nature, SBA, business financing, credit lines, things of that nature. So I actually run two different lanes, trying to help as many people as I can.
Awesome, bro. Now, you hit a lot of jargon in there. So immediately I was like, what is a non-conforming loan?
Yeah. So basically you have your, let's say we'll call it Fannie Mae, Freddie Mac, or your government-sponsored entities.
Mm-hmm.
You have your FHA, your VA, your CHFA. Everything with an A at the end of it is a government loan, whether it's the Connecticut Housing Finance Authority, whether it's the Veterans Association, whether it's the United States Department of Agriculture. Everything with an A is a government loan.
Oh, okay, that makes it easy.
But those are all your conventional and government financing. Then your non-conformings are things that don't fit in those boxes, whether it's over the limit of what conforming loans take. So like if it's over like
okay.
$4 million loan, if it's someone that needs like to use alternative ways of proving their income, if the property has something that's unique about it that has to be different, that's a whole different subset of lending. So you start getting into, instead of us as a non-bank handling the loan, it starts going into something called portfolio lending, where instead of a bank actually the one that's guaranteeing the financing, it's usually like a bunch of hedge fund guys that say, hey, we got $1 billion we want to lend out on this particular product. Or it could be a group of another group of people that specifically deal with a certain type of loan or a certain type of pain point that lenders run into, and they're willing to do the financing on those.
Oh, and is that similar to hard money? Because I've heard that term before.
Hard money is a little bit hard. So think of portfolio like in the middle. If you're rating it like on a scale of 1 to 10, where does portfolio fit in? It's not the best, but it's definitely not the worst.
Okay. So Manchester, is that where you came from? Is that what it looks like?
Originally from Manchester. And then my parents moved after 8th grade, and I went to Windsor High.
Yep. That's what I have here. 1990 to 1994, which means that we graduated the same year. So we have the same gangster rap from NWA into Biggie Smalls.
And then graduated from Windsor, and then eventually moved back to Manchester.
Yep. Oh, you went back to Manchester.
Yeah.
Okay. So talk to me about high school, because this is where the football stories start coming in.
So so high school, it was.
You were famous. You were a famous football player in high school. You were famous. Everybody knew who you were. And when you get a nickname,
everybody knew who I was.
When you get a nickname, people know.
But the thing was I didn't appreciate it until I got older, and I'll explain. So
okay.
So when I got into my junior year, I played baseball for most of my childhood, but baseball I was pretty good at, but football is what I loved more. So I wanted to try out for the football team. And my junior year, I went to try out, and I'm like a scrawny, 5'7", 5'8", 140 something, nothing. So I'm like, okay, what position am I going to try out for? So I basically just tried out for every position. They would have tryouts and say, okay, try out for what you want to play, and then they'll decide who's on the team and who they want to bring to future tryouts. So I tried out for every single position I possibly could, and the captain of the football team, the senior, his name is Dwayne Huff. Great guy. He looked over at me and he goes, hey man, what are you trying out for every position? And I said, yeah. I said, I just want to make the team. He goes, what do you think, you're all purpose? And that's how the all purpose came into play, because I made the team, and I would literally, my job was to know every single position. I could play quarterback, running back, cornerback, safety, tight end. I played basically every single position at one time during practice. I played every position. I knew exactly the correct techniques. I knew exactly all the plays. So what would happen would be you'd have a situation where you'd have a player with greater athletic ability than myself that was in need of a lesson on what they're supposed to do on the field. And at the time, Clifford Snow, Coach Snow, was the coach of the football team. He's now we actually went to become the athletic director over at he was at Kentucky, East Carolina.
Oh, okay.
He would put me in and be like, all right, run the play. And then I would run the play, show exactly what the play is supposed to be. And, there'd be times where, you're blocking and there's a guy 3 times the size of me because I was scrawny and I do my block correctly. And the point was, if I can do it, why can't you do it?
Nice. So he essentially threw you out there as bait. Almost bait, but listen, guys, listen, if he could do it as small as he is, he could do it. And that I feel like that led into your entrepreneurial spirit even to that. I feel like you carried that forever.
Yeah, and then when I got to my senior year, I did also on top of doing that, I also did a lot with statistics. So I would sit there and read statistics. I would actually go out and scout other games, look and say,
oh, nice. Oh, dude, you are definitely all purpose.
So, but for me, it was fun. Like for me, it was fun going out and then trying to figure out, okay, on, third down, 60% of the time it's this, or for me, it's all numbers. So it was fun to kind of calculate what was going on. And then I never got a chance to play in a varsity game, but I still got my letter. So let's go. So it was really cool, but I didn't understand at the time. I didn't really understand the importance of the whole all-purpose and doing all the work and being able to do so many different little things. Not the greatest, but at least enough to know what I was supposed to do. It took me a long time to figure that out.
So after that was Tunxus.
No, I didn't go to Tunxus. After that, I went straight into
I have Tunxus here. I don't know why, because I found a yearbook with you in Tunxus.
No, so you're gonna get that from your ChatGPT. So my father has the same name as me.
Oh, totally makes sense. So okay. Well, I'll tell you what. Tell me about your father and how he influenced you.
So as you know, my name, I'm actually Norman DeLaura II.
You are.
And the reason why I was called my name was Norm was because when I was born, they didn't think I was going to survive. So I was actually hemorrhaging from the brain at birth.
Oh, jeez.
So at the time, they weren't 100% sure. So my father was like, hey, listen, if he's going to die, have him die with my name. And that's how I got my name as Norman DeLaura II. And then I was in the hospital.
It's the most emotional statement I've ever heard. And it's coming from somebody who had a daughter in the NICU. My first child was a NICU baby. So yeah, I understand their feelings.
Yeah. So I had my last rites read to me when I was born. It was crazy. So I guess I was in there, according to what I'm told, I was in the hospital for about 6-9 months before I could leave. And
wow.
Then the next thing they said is I was going to be slow. So if you ask my friends, they might say I'm a little slow, but
you were not slow. That's for sure.
I think I came out okay.
No, I think you came out more than okay. You're talking with you just outside with our other projects we're working on. I think you're an amazing guy and everything. And I love your, you have this very kind of like, it's okay. It's going to work out attitude. And I love that. And it's infectious. I feel it when I talk to you. So, all right. So not Tunxus. So what college are we looking at here, or no college? And that's okay because I love no college people.
So I'll tell you what I did. So after I graduated high school, I needed a job, and I went straight into sales. So one of the first jobs I had was I was 18, 19 years old, selling furniture out of catalogs. So people would have to come in and spend $2,500 to join this membership club. They had to make a decision that night, and they'd have to understand that they were going to save money on buying furniture and jewelry, and that the savings was there to be part of the membership. And that's what I was doing at 20 years old. And I was pretty good at it. The close rates, because it was the nationwide chains, the close rate was supposed to be 50%. Mine was like 70 something percent at the time. And it was just funny because at the time, being 1920, you'd have, mid 30s, 40-year-old individuals coming in looking to, see if they should join the club. And it worked out pretty well. And that's where I started really getting into sales, really getting into, the different, being able to speak in front of the public, because you have to do a whole presentation, which was like 45 minutes to an hour long. I learned a lot there. That was my first time like being out in the wild on my own. So between the employees that worked there that I learned a lot from, because they were all, at the time, they were all in their late 20s, early 30s, so learning from them, because I was, a 19, 20-year-old kid working in sales.
But that's the thing is like, sales, although technology has changed, the process has changed a little bit, that foundation of old school sales still exists.
To this day, I still use the same sales numbers that I got from them when I went when I did seminars for them, and it's always the 26-2-1. You're going to have 20 people that are interested. 6 people are going to do whatever it is that you told them to do, whether it's, fill out an application, whether it's, hey, give me your information, whatever that part is. 2 of them are going to qualify, meaning that they're 2 that really could use the product. They're going to qualify for the product. They need the product, and then 1 of them will actually buy. So it's 26-2-1. I've used that forever, and that's usually what I go by when I'm trying to figure out numbers.
So funny, because when I do email marketing, most people are like that. When I talk to clients about, say email marketing really works. No, it doesn't. I always trash it. I don't look at spam. No, it works 2 to 3% all the time. It's almost guaranteed. So that 26-1 kind of matches with exactly what we were talking. It does. It absolutely does. All right. So no college, successful salesperson selling furniture and jewelry subscriptions. Is
Yeah,
it
so
like
basically-
was it like Finger Hut? I feel like it's something like I feel like it was Finger Hut or
It
something.
used to be called United Consumers Club. That's what it was used to be called way back in the day.
Dude,
So-
you have this face like it's such a joke though. Like tell
because it's hilarious because at the time you realize it now, not when you're doing it, but at the time, you got all these people coming in, and think of it this way: they'd come in, they'd see that they're saving all this money because the savings are great. The problem was just like a gym membership, people would buy and then
not
they would
use
use
it.
it. So you'd have that's where it came into play, whereas you'd have people that would spend $2,500, $30,000, whatever, because obviously times change as the years were going on,
Right.
and you'd never see them in there buying. They just disappeared. So it just got to the point where it was like you knew that the benefit was there, but you couldn't tell them, hey,
use it, otherwise it's not worth it. Yeah.
Exactly.
Yeah. So, but they're great for the company though.
Yes.
Basically, free money essentially.
So then after that, I was like, okay, this is fun and all, but it's not. There's no other place to grow. I got to the point where I was going to all the sales conferences, and everybody knew who I was, but there really wasn't any growth. There's no promotions or anything like that. So the next job I had was I was working at Beneficial, which is part of Household Finance. So Beneficial used to be on Main Street, East Hartford.
Okay, so this is your walk-in to lending at this point.
Exactly, and there it was mostly personal loans, and then we did the rapid refund checks from H&R Block. So when people wanted to rapid refund the check, they'd come to Beneficial, had the agreement with H&R, and they'd come in, get their checks. We give loans out, and there they actually did mortgages. Now remember, this is back in late 99, 2000. So back then, Beneficial would do mortgages, but the interest rate was double digits, and the only thing that they allowed for was bi-weekly payments. So you could cut down the term of the loan from being like 30 years to whatever. I think it was like 12, 13 years, if it all played out for them. But you're paying a higher interest rate, and every single one of the personal loans, and this is kind of funny. Every single one of the personal loans charged 7.5 points on every single loan. Now, if you know what points are, everyone talks about how many points are you charging on a loan, and sometimes it's none, sometimes it might be 1, it depends. But back then there was 7.5 that we had no choice but to charge, and I didn't know what they were. I was like, all right, I guess it's just whatever the company fee is. So funny thing with that is at the time my parents were looking to buy their first house. When we grew up, we really didn't have any extra cash or anything like that. I mean, we barely scraped by. So for my parents to think about buying a house, it was like a big deal. And they actually, they had the if you're grading credit, they have the C- credit where it's barely just enough to maybe get a house. And they actually got a loan approved, and they were like, hey, do you mind checking out this loan? And so I went into the mortgage company down in North Haven. And I was like, what do we got here? And I'm looking at the paperwork, and it only says 3 points being charged. And I was like, all I can tell you is we charge 7.5. So you're getting charged 3. So it looks like a good deal to me. And the guy that was doing the loan was like, hey, you should come do mortgages. You should come work for us. I mean, if you're doing that, if you're doing personal loans at Beneficial, you should come do mortgages for us. So I was like, all right. So I decided to work at the company.
And that's Travis?
No, that's
so not Travis yet, because I got Travis mid-2000s Travis.
Yeah, you're getting there. So this is at
man, you really were. Yeah, okay, let's go.
This is at Nutmeg back in the day.
Oh, I remember Nutmeg.
So I get down there, and there's one guy that actually runs the facility, and then the one guy that actually has the money.
Mm-hmm.
So my first day I get there, everything's gone in the office.
Uh-oh.
So basically,
you quit your other job.
Yeah. So basically what happened is the guy that ran the mortgage company left and started his own mortgage company. And then the guy that provided the funding didn't have, he didn't have anyone to do loans. So
because you need a license and stuff, right? Because he was probably
he had the licenses, he just didn't have the manpower. He didn't have any.
Oh, and here you are walking in.
So I basically worked out of New Britain at his building that he owned and learned everything on my own. So that's how I really got into the mortgage industry.
Wait, what year was this?
This is like 2001.
So what? No. So I don't think the amount of information, the internet was there, but the amount of information probably wasn't.
No. So I'll tell you about the internet, because the internet wasn't there enough, and I'll tell you why. So what happened was, I'm struggling because I'm, number one, I'm struggling for two reasons. One, they have no money to pay me. Okay. So number one, they got no money to pay me. Number two, I'm trying to get business so they can pay me and make money. And I had no other place to go at the time. I'd already left my job. I didn't know what I was going to do. And I get a phone call from this realtor. She calls me on the phone and she's like, hey, I have a commercial building. I can't remember. It was like a 5-unit, 6-unit apartment complex, whatever, that she needed financing on. And she's like, can you do it? And I'm like, of course I can. Now, I had no idea how I was going to get this loan done. So because the internet was not around like that, my boss bought a book. It was a book that was about this, I'm going to say about that thick. And it said all the banks and that are out there in commercial lending from A to Z. So I started calling them all from A, and I just kept calling every single commercial bank out there until somebody would actually help me. And I got all the way up to F when I got the First Union. I don't know if you remember First Union. They got bought out by TD Bank back in the day. And I got a hold of a guy in Florida, and the guy was like, are you just calling me randomly? I'm like, listen, I need help. I got an apartment complex I need financing on. Nobody's helped me. Nobody here knows what they're doing. I'm just trying to get this deal done. And he actually walked me through the process. He's like, we can't handle this loan. He's the one that put me in touch with portfolio lending for commercial financing. He put me in touch with like how the process works, documentation you need, all the little steps that, back then would make my job a little bit easier. So for the next, I want to say year, on top of doing the residential, after we finally got our legs under us, the next year I was doing commercial financing, but I wasn't really getting any loans approved. It was more so being able to take the deals in, send them to him. He would tell me if they were good, bad, what the situation was. And then after about a year, he's like, listen, you got to find somebody closer to you that can actually really help you. And he put me in touch with, and we're still friends today. He's been a great mentor. He put me in touch with a guy named Larry Levitz. He recently retired. He was at First Union. Then he became the vice president of business banking at Webster Bank. And he's got the Massachusetts Bostonian accent, and he tells it like it is at all times. And he is an amazing guy. And he would just look at the file and he'd be like, this is dog crap. This is this. Don't waste your time. You got more things you could be doing to make money. Don't waste your time on this loan. This loan's good. I mean, he just knew what to do, and it kind of helped me along. And then eventually I started finding portfolio financing, and I started doing a lot of small commercial loans for 6-unit, 10-unit apartment complexes.
Well, I love the fact that you found a person that was just willing to take their time and just say, hey, step 1, step 2, step 3, here, this doesn't work, but here's something I think will work for you. There are people out there that are willing to do that. And I think the Dads group really proves that. I also love the fact that this other guy comes in. I'm sorry, what was his name?
Larry Levitz.
Larry Levitz came in, and it was straight talking.
Yeah.
Straight talk is the best, because you might feel a little emotional, a little kind of but at the end of the day, it comes from love. It comes from, I want to see you succeed. Just don't waste your time with this stuff. I promise you this is the way to go. And I love that the two of them mentored you like that. I mean, they've been that mini mentor, and then of course Larry took you on.
Well, the biggest thing that and then to this day it's the same thing. The latest thing Larry taught me was, you only have so much time. So if you have something that's dying and there's no way to save it, and you could try a million different things, but there's no way it's going to get any better, you need to move on. Yeah, I know that you're like, you want to close it because you want to get the money, you got bills to pay. But the more time that you're spending on something that's dead, that's not going to go anywhere, even though that it's not, you're trying to find, some magical unicorn loan that's nobody out there can do, and you think it's going to be there just to save this one loan, you're wasting all your time and energy on something that's not productive.
Just time to move on sometimes.
And you have to eventually learn to cut it off and move on to other things and other people you can help.
All right. So my man, 2012 is when you met your wife.
Yes.
And 2014, you went straight to marriage. 2 years, you're like, nah, this is my girl.
Yeah.
Has she been I feel like she's been your rock.
She's great. So we met because so I took a little break from mortgages. So in 06, I had cancer. So I had lymphoma, Hodgkin's disease. So during the crash, I actually was working for Travis Mortgage in Glastonbury at the time. So during the crash, I actually had cancer, and one of the people in charge, his mom also had cancer at the time. So we were both going through it at the same time in 06. I had it, went into remission, then it came back, did an auto transplant up at Dana-Farber up in Massachusetts. But during that time, during the crash, it was challenging because obviously the market was challenging. But I was working really from my bed. So I'd have my laptop, I'd lay down in bed, I'd take some calls for 45 minutes, then I'd sleep for a couple hours, then I'd take a few more calls, and I'd just do whatever I could to make money. But at the same time, I just couldn't work 8 hours. But they actually did me a huge favor, and when it got to the point where I couldn't work even close to as much as I was working, they put me down as a full-time employee to keep me on the insurance. So even though I wasn't producing anything, they kept me on the insurance, which was critical at that point. And at the time, the market crashed, the company got bought by somebody else. That person couldn't turn the company around because, like I said, every mortgage company was going under in 07. It finally got bought by somebody else, and that company just laid everybody off. So,
including you.
Yeah. Oh, yeah. So the real estate market crashed. I had just gotten over. I had just been considered cancer-free after the transplant.
Nice.
Didn't have anything else to do because mortgages was all I had done. So I was like, okay, what am I going to do? My buddy, he owned a couple restaurants in Manchester. So I started managing behind the bar at one of his restaurants, and that was a lot of fun. We had a great time there. It was definitely a fun experience. At that point, my couple years later, my father passed away. They were opening up another restaurant in Manchester, so I invested a little bit into that restaurant. Went over there and started working over there. And I was handling like parties, events, and things like that, trying to for say people coming in. And my wife now, her and her friend came in to do their East Catholic reunion.
Okay, Catholic girl. Okay,
East Catholic reunion. That's where I met her, and so the interesting thing is, she left, and obviously employees talk all the time, and the next day she came in, and she's sitting at the bar, and I'm telling everyone she's coming in to see me again. Then the next day she comes in again. She's like stalking.
She knew what she wanted.
That's the story of. I'm like, she was a stalker. She stalked me, and then she sent me a Facebook message, asked if I wanted to go out. I told her that I was.
Wait, working. So she asked you out?
Yeah.
Awesome. So then, I love that because just as a side note, all the women out there, we're pretty much oblivious. We don't know. We're so nervous. Like we don't want to approach any of you anymore because we feel like we're going to be a creep. So please, you got to come over and bonk us on the head. It's right. Am I right or wrong on that? So she comes. All right. So she's in. She messaged you. You go on a date. This girl. From what I read, she's amazing. Like really amazing.
So she met me. I was like, listen, I'm working at the other restaurant because I'm managing the bar over there tonight. Why don't you come on down? So she met me at the bar over there, and that was it. That
was it. All right. So Travis comes after this.
So Travis was before this. That's it. So Travis is the one that got bought out, and then
You mentioned that earlier. Sorry.
And then no, you're good. And then what happened was but I went to school with, he worked for a mortgage company. He happened to be coming in. We all kind of run the same circles. Because the thing about Manchester and Windsor is, as much as they're two different towns, a lot of times everyone runs the same circles between the two towns.
Yep. So this is everybody kind of knows everybody, especially in specific industries. It just seems that way.
So he asked me to come back to work in the mortgage industry. So the crash had already happened. I was like, all right. So I came back. And
were you hesitant? Because that crash is pretty bad.
No, because I mean, I like it. I like talking to people. I like the sales aspect of it. I like being able to be a resource and help. So I got back into the mortgage industry, and that's where I've been since.
All right. So now I see something at Flagstar Bank too here.
Yeah. I left.
So you did a lot of bouncing around until you.
Yeah, it's not really a lot, because if you think about it, I've only worked for actual mortgage companies, which in our industry, people work for a ton of mortgage companies.
Okay.
I've worked for my entire life, 2, 3, 4, basically 5. Went over to Flagstar, and they are a bank, so they had their ways that they did their stuff, and it's great. It was a great fit. It worked out pretty well. And then what happened was, and this is kind of, everything goes kind of full circle. The people I worked with over at Travis Mortgage back in 06-07, they had started working for a mortgage company, franchises that they had, and they ran all of New England, and they asked me to come back and work for them. But I mean, and I worked for them in 06-07. They helped me out with when I was in a time of need. So I was like, you know what? Let's do it. So I moved and started my own branch. And then I think it's like been 3 years. All we did was we was a primary residential mortgage, and all we did is we basically took the entire New England group and we moved it all to Supreme Lending. So it's the same people, everything's the same. We just changed.
Oh yeah, I see. That was a smart move.
We just changed who we pay the money to. So
yeah, but not only that, but the Supreme turned out to probably be a big back. You're backed much. You have the marketing, you have the backing, you have the bigger company. I feel like it was a really, really smart move.
Yeah. So and it's worked out pretty well. I can't complain. They do a lot to support their employees, and they also do a lot in the back end. From when you're dealing with loans and stuff, you want to make sure like the back end side, whether it's processing, underwriting, is done timely and efficient. They've helped me out with, I would say, if anything, condos, because condo associations are tough to get approved if they're not for certain loans.
I can imagine. Yeah.
So, but the condo team over here is phenomenal. They do it for me in like 24, 48 hours. It's amazing. I've done some loans that other lenders couldn't do, specifically because of the condo team. So I'm very grateful for that team.
So now you're with Supreme. Is this when All Purpose came to be?
So what happened was, the way All Purpose came to be was, so I'm at Supreme Lending now. I haven't gotten back into commercial financing or anything. Nothing. So going again, everything coming full circle. About 20, like I said, was it 20 years ago? The first commercial deals I did was with a realtor. She was new to real estate, and her and her mentor or partner, whatever you want to call it, they're the ones that were doing a lot of investment properties. And back then they would send me, I mean, at the time could be hundreds, 200 names to call. I'd call all of them, qualify which ones were good that could invest, which ones couldn't invest. We'd break it down and figure out which ones to focus on. I mean, we had a system that was really, really good. And then obviously, having cancer and being out of the industry for a while, you lose touch with a lot of those people. Well, fast forward when I got to Supreme, and primary and Supreme are basically the same. But when I got there, we reconnected, and she came to me and was like, "Hey, are you doing commercial financing?" And I was like, "Not right now." And she was like, "Well, this is what I need, because I'm not getting enough support." And she's one of the top agents in the state of Connecticut. Her team is phenomenal. So I couldn't pass up the opportunity to help her. So I formed DeLaura Capital, specifically for her to be able, so I could do commercial financing for her, and then it led to commercial financing for everybody. So she is I have to thank her for getting me to do that, because it was a risk that and I'm normally more conservative. I don't take as many risks as I should. So for me to do that was a lot.
It's every time somebody else starts a business, it's always that crazy risk, and you're so scared. But when you take that leap, though, because you're very successful today, I can just tell, very successful. And it's if that's anything anybody should take away from this show is, yes, it's a risk. Yes, things can go south, but it can also go very north if done correctly. And you got to it's the discipline. Neil's always told me that discipline, consistency, grinding. When you first start something, because I'm sure when you first started, it was not gangbusters immediately.
No, and it's still a work in progress. It's still got a lot of work to do. Getting the website up, or doing other things that need to be done to be able to market for it. And that's where the whole all-purpose lender came to effect, because I was like, you know what? I mean, I'm basically doing what I did in football. I tried out for every position because I could do every position.
Yep.
And I was able to, and that's why they called them, that's why I was AP all purpose. And it's basically the same thing for lending. It's all purpose lending. I mean, basically it's the same thing. I mean, if there's something that somebody needs, either I can do it or I can find the right person and direct you to where it is. And my big thing was, when you growing up, we used to have like, it was hot dogs on Wonder Bread. Okay.
Yeah. With ketchup, which I can't stand today. I don't know. I used to be okay with the ketchup. Now I'm not.
It was, the fish sticks in a box.
It
was like, it was
no dinosaur nuggets. I don't think we had dinosaur nuggets when we were kids.
They had dinosaur nuggets, but
that was a luxury.
Exactly. I grew up in a time where, we barely got by.
Yeah. I can relate to that.
So, my father, he was a salaried employee. He worked in the dairy industry over at Seal Test in Hartford.
Oh my God. Hey, you really just pulled something out from my history. Go ahead.
Well, here's a good one for you. So before the OSHA rules, my brother and I, we used to ride the milk crates down the conveyor belts.
Before the OSHA rules.
Well, yeah, because you can't, so like, it was a good, it was a fun time back then. We used to visit, but the guy worked like 80 hours a week.
I think we have something in common, because my mom, I think, worked for Seal Test, because I remember if there was anything that was always in my freezer was ice cream.
Yeah.
There was not food, because it was hard during that time.
Well, that's why we always had milk, because the milk, we had regular milk, and our specialty was chocolate milk, because we always got free chocolate.
Let's go, that's good enough, right?
But my father worked at Seal Test forever, but his father actually worked there before him. When they came over from Portugal. So when my grandfather came over from Portugal, he actually brought over a lot of the family, and they'd all live in an apartment complex in Hartford all together in different rooms. And at like 4 or 5 in the morning, he'd knock on all these doors and tell them to get up, and they'd all go to work at the same time.
That's actually pretty cool. And that's it. And that's the thing that, like, I feel like, and I think that we're in a position today that a lot of our kids don't quite understand that kind of a struggle, because as parents of that struggle, we wanted to make sure our kids didn't struggle. And sometimes I wonder if we're doing them the disservice.
Well, the interesting thing about that story is it wasn't any of my family members that were able to tell me. I was at a birthday party that my kid was friends with, and the grandfather happened to be there. And when he heard my name, he was like, "Are you related to Ernest DeLaura?" I'm like, "Yeah." He goes, "I worked for him," and he was telling me all the stories because he worked for him. And that's how I was able to hear the whole story.
That's beautiful
as well. So when I heard the whole story, it was kind of cool, because when I was a kid, it's when my grandfather died. So I didn't really get a chance to talk to him or learn anything as far as the history.
I feel like I feel like he's in you anyway, though.
It was a cool getting the story from somebody that I randomly met at a birthday party.
Yeah, I love that stuff. I mean, you got maybe we gotta get coffee, because I want to shoot the shit about the 90s and stuff, because I feel like we had the same path. It was wild, bro. Like streetlights. So you come home at the streetlights. You know what I mean? With no cell phones, and parents didn't know where we were. We were just running the streets. It was wild.
Walk up to I mean, we used to, so I was living in Manchester. We were living in a 2-family, and my buddy Corey lived maybe like, we'll call it a mile. And I used to go to his house all the time because there was a one of those sub fire stations, and it had a bunch of grass with a guardrail, road guardrail, and we used to sit there and just play wiffle ball all the time. We just play wiffle ball and just sit there. It was just like all the kids would come play. I mean,
now I got to force my kids to the back. Put the tablet away. Go outside. No, it's always that,
Yeah, but it's just as bad as for us because I probably don't go out as much because now my friends and I will get on and play video games, and we're all because some of them are outside.
Oh, you're a video game player even now?
Yeah, I still play.
Wait. What are you playing? Tell me you're playing Marvel Rivals.
No, I play some Marvel Rivals, but mostly COD, mostly Call of Duty.
Oh my.
So during COVID, what happened was during COVID, so when
COVID, that was Warzone.
Exactly. So nothing, there was you couldn't go out anywhere, and Warzone came out, and I started playing Warzone, and met a bunch of people from all over the country.
Me too. Yeah, I know Canada.
So I have a bunch of French Canadians that I play with.
So for some reason, I don't know why we connect with Canadians easily from Connecticut.
French Canadian swears. Playing video games.
Oh, we can nerd out about this, but I don't want to take up too much time because I don't know if our watchers are into the video games like I think we're about to talk about. But no, dude. Yeah, dude. I was a big Warzone, but the cheating, it just destroyed it.
Yeah, but it's still fun. But
it is.
You made a lot of friends.
You did.
The text. I've met some of them actually in Connecticut. We've met up. It's like, so it was a fun experience. But to this day,
all right. Hold on. Where's your skill level?
I'm okay.
Okay. All right. You happy to see Verdansk come back or what? Everybody out there's like, I don't know what Verdansk is, but
if the cheating doesn't get any better, Verdansk ain't gonna save it. But
that's for sure.
It's still fun to play.
So you have 3 daughters?
Yes.
So, and hold on. And you're a grandpa.
That is true.
Yeah, it is. Tell me about your daughters who are into dance.
Yeah. So they the 2 oldest, 20 and 16, or 20-year-old did a lot of dance. 16-year-old still dances a ton. She also does a lot of drama. So she's in, like, they're doing their performances coming up in a few weeks. They're doing a Chicago the musical, so that's coming up. So that'll be fun. And she's really good at it. She does a great job. And my youngest, who she's 12, she didn't go the dance route. She's more into horseback riding, video games. So she's got her own personality, and she's hilarious.
Okay. You want to tell me about your granddaughter, though? How did that feel?
So
look at you, bro. Why are you hesitating? What's going on with that? Does it make you feel old?
Old, yes. But no, it's more so, like I said, I know. So my 20-year-old is, she's figuring herself out. She's got a good job. She's got herself coming together. She's doing what she's got to do. She's got a kid that she's supporting with, everything she can.
Mm-hmm.
It's kid's 9 months. So he's still she FaceTimes Jessica every day.
Nice.
So every day there's a FaceTime call.
Oh, that's right, because grandma she must have been, this is a love. A grandparent's love is so different than a parent's love.
So he likes so from what I know so far is the mashed potatoes I make are a win. So
let's go. All right.
And he gets some whipped cream when he comes over as well. So, that's a little whipped cream on the fingers, let him enjoy himself, have a good time. So
tell me about lending climate today. We're past the crash. And do you find that lenders are starting to get complacent again? Do you think that we're going to sort of get ourselves in trouble the same way? Or is there new guardrails that everybody's still following? Because go ahead.
The guardrails have been up. Will they continue to be up is the question.
Yeah, that's what I was thinking. Because I feel like people are like get to a point. Oh, we're okay now. We don't need to.
Yeah, and then but the history repeats itself. So I mean, what people don't. If you look at the history of lending, or banking or anything, history always repeats itself. You have where there's good times, there's some fraud or whatever that's going on, or bad lending practices. everything tanks. Then they're like, hey, we learned our lesson. We're going to be okay now. And then guess what? History always repeats itself. So will there be something that comes along that is not good for the lending industry? I'm sure, but hopefully it's not as bad. Hopefully the roller coaster isn't as big a dip. As far as lending overall, I'm sure, as or anybody knows, finding a house right now is really the issue. It's inventory. I mean, inventory is the biggest kicker, but that's got to do with the fact that, during COVID, interest rates were 2-3%. So when you have 2-3% interest rates, it's kind of tough to say, hey, let me sell my house and buy a house at 7% or wherever interest rates happen to be for that particular day. Or even if it's a little lower than 7%, it's tough to say, hey, I'm at 3%, let me go pay 7%. And even if you decided that you were going to do that, the second question is there's no inventory. So where are you moving to? So it's a bit of a challenge. And the third aspect of that makes it more difficult is in certain states, it's tougher to develop. Like in Connecticut, I'll use that as an example. There are towns out there that have specific zoning regulations that make it more difficult for developers to develop housing. And they do that on purpose. And the reason why, they have the land, but they want to make it as complicated and as difficult as possible for developers to build, because when you have new houses, it means more infrastructure, more police, more roads, more schools, more teachers, which means higher taxes. And, you get a town that's not used to having to pay for all that infrastructure. They're not going to be too pleased when you tell them their taxes are going up because they're building new houses in your town. So until there's some sort of incentivized program or some sort of program where the state can come in and or the Fed can come in and say, hey, we're going to help subsidize that tax burden for, say, 10 years, just like they do for a commercial business.
Oh, yeah, sure.
So I co-chair the Economic Development Commission of Manchester. So, you'll have situations in Manchester where you'll have a big company like Bob's Discount Furniture they have their headquarters in Manchester. So when they decided to build their headquarters, one of the keys that they asked for is they wanted a tax abatement for the new building. And I think it was for 10 years or whatever. Now, it didn't change the taxes on what they were already paying. It was taxes on a new building that didn't exist, that we weren't making any money on right now anyway. And all it did was brought more employees, it brought more people to Manchester. You would need to do something like that from the commercial side, but you would have to do it from the residential side and say, hey, listen, to help you, decide to allow for development in your town, either the state or the Fed or somebody's got to come in and help pay for those taxes that it should go up for, say, a 10-year period to allow the town to be able to build the infrastructure that's needed in order to have those new residents in the town. There has to be some sort of way that this can work. But
that's a tough ask right now, specifically.
But the other issue is this. The other issue is the fact that every town has so much in expenses that can easily be taken care of if we just were like other states. So when you go to other states, you have more so done by counties. Whereas in Connecticut, everything's in individual towns. So you have individual towns. Every town has a fire chief, a police chief. Every town has everything. But you can't tell me that there aren't ways to regionalize some of those expenses to be able to help mitigate the taxes that everyone's paying. Use that money, even if the taxes were the same, but if we were using that money to help other aspects that we needed help with, it would probably be better for everybody. But then the question is then, which town gives up, let's say it's,
that's the one.
Which town gets the fire chief? Which town gets to keep the police chief? Which town gets...
But even further, there's a lot of money coming out of each of those towns. So in their head, they're like, we're not only that, but we're also going to lose funding from the state, funding from the feds because we don't have their own setup. It makes sense what you're saying, but I can immediately see the rebut, and then all of a sudden all the new stories are going to come out. Reduced fire protection in X town or whatever, and then the next, everybody's like, no, we can't do that. It's like, hold on,
that's not what's going on.
Yeah, it's like, guys.
Until they come up with those solutions, that's the only way that you're going to be able to lower expenses by regionalizing the areas of Connecticut. And number two, you got to figure out a way to make it to give the towns some sort of carrot on the stick to promote development. And so, like right now, like for example, there are rules on the books. The state actually came out with rules on the books, and I can't give you the exact statute, but at the end of the day, if a town doesn't have at least 10% of in affordable housing, there's a way for a developer to appeal the rules of the town, the zoning rules of the town. They can appeal and actually, so let's say, for example,
So like override it almost.
yeah. So let's say, for example, hey, we're only going to allow 10 houses on this area, but you know that you could build 20. You can appeal that to the state because, hey, they don't have enough affordable housing. So as long as you're going to put affordable housing in,
oh, I see. And it forces them.
Yeah, exactly. So the state is trying to come up with ways to make it more attractive and find ways to get around certain issues, but it's really coming down to the town level that's really got to make these changes.
And no shot we're seeing lower interest rates, right?
I mean, you're going to see lower interest rates, but it'll never get, unless we have another pandemic or another catastrophe where we have to put an influx of billions of dollars back into the population like they did with the stimulus. You're not going to see interest rates get to 2%.
Oh, you know what though? Maybe Doge will though. There's talk about an $8,000 stimulus going to everybody. So
there's talk about a $5,000. That's a mirage of $5,000 when the meat of the issue is billions of dollars. That's the crumbs. That's not going to do anything.
No. I was just thinking. I'm trying to think of because you're right. The only way to unstick the machine, because it's basically a wedge in the gear right now with these interest rates being 2.5%. If you get it to at least close to 3 or 4, I think that some of that wedge will let go a little bit, and then everybody start making moves and buying houses, but then you got the inventory issue, which drives the prices up, and it's oh my gosh.
If interest rates got to say 5.5, right? So if you had interest rates of 5.5, and you also had reinvestment into development of housing in New England, okay, I'm just talking New England here. If you were able to find out some magic formula to be able to get these towns to allow for more housing development, because the land is there, it's just a matter of getting the zoning and stuff. If you were able to do those two things, the housing market would be far better off. And the reason for that is because the people that would be at 3% saying, hey, 5.5 is still higher, but I got all this money I'm making off this house because I bought it for $250,000 and it's worth $350, $400 right now. With all that money, if I just put down X amount of cash from what I make on the property, my mortgage payment remains close to the same. So if those two things could happen, then yes, that would be the perfect world where everybody would be happy. Will either of those happen? The rate getting to 5.5, eventually it will. How long will it take? Well, it depends on what goes on over the next year. But will it get there eventually? Will it get to 3? I highly doubt it.
I feel like there's just kind of no choice. The feds are going to have to do something. They have to make some dramatic move.
Well, remember though, so as much as housing to me and to you might seem like that's the biggest, most important thing that we need to worry about for interest rates, the Fed has many other problems that they need to worry about where the interest rates so they're not looking at just housing saying, hey, we really got to get that interest rate down to be able to, help housing. Housing's probably not in their top 2 of priorities.
Yeah, you're probably right.
They're working on first before they worry about how the housing and interest rates are going to be.
No, these times are wild right now. Like this is so drastically different than what we grew up with and all the things that we've seen 10 years ago, 15 years ago. COVID really threw a monkey wrench into everything.
Yeah, it kind of sped up the haves and have-nots. Because what happened is before COVID, someone would call me on the phone and they'd say, hey, I want to buy a house. Okay, what's your price range? 180 to 250,000. And you'd be like, perfect. There's plenty of houses at 180, 250,000. Person makes 60, 70,000 a year. They can afford the mortgage payment. Everything's great. Well, now if I get a call from a client that's looking for $180,000, $250,000 house, that's like finding a unicorn.
Yeah, or downtown Bridgeport.
Or if you find something at 180,000, it needs a lot of work. And now, being that interest rates are higher, the same person that was making that 50, 60,000 probably can't afford that $180,000. You know what I'm saying?
Yeah.
And then what happens is a couple that let's say they were looking and they make a combined income of say $100,000. Instead of looking for houses in the $300,000 range, they need to look for something at $450,000,
which is just out, way out.
Right. But they're making decent money. And that's the gap that's happening, is you have a gap of the people that would normally be buying in that mid-range tier of, say 200 to 300,000.
Right.
The houses are getting more expensive, but the income is not going up to offset the expense on the housing. So they're basically getting left behind. And that's the problem.
So it's just like you said, it's probably going to seem some kind of crazy catastrophe, which none of us want.
No, but until what's going to happen, and what happens is, leading back to our other question with developers, what do developers build right now? Well, if the towns aren't going to let them build housing, if it's not profitable, because you can't just build one house as a developer and make a profit on it, you need to build multiple houses to make it worth your time. So instead, what do the developers do? What do people do? They make apartments. They make apartment complexes.
Yep.
So, and then everyone, so being in Manchester, we have almost 60,000 people in town, and we have apartments going up, and obviously, the Facebook warriors will get out there and they'll tell, oh, more apartments, more. I mean, why aren't they building houses? Because there's no land in Manchester. That's why you don't build houses as many in Manchester. So there's no land. It's not a matter we don't like it in Manchester. We have no land left.
It's very similar situation here in Southington. It's the exact thing.
Land, and the towns that do have the land aren't building houses. So you got to make what you can make. And apartments make money for the developer. They make it's housing. They make a monthly rent returns. I mean, it's profitable. That's why it's there. But there's just no room for single family houses.
So I want to switch gears to Dads in Business. We're getting to the top of the hour here. We're probably going to go over a little bit, but that's okay. Sure. How did you discover Dads in Business?
So Brian Waddell, his mom, Maria Waddell, and I did business together. She was a realtor, and that's how I met Brian, and that's how I found out about Dads in Business, and that's how I got on the Facebook group, and that's how I met a few other people that are also part of the group too, that I've actually met in person.
So tell me, I switched to your full screen and I was expecting a story to come out of it. Tell me what's your favorite aspect about being in this group? I mean, I know mine. I talk about it a lot, but I want to hear what your thoughts are.
So it's a great resource that has multitude of ways it can help you. I mean, for example, being that, bought a house during COVID, the inspection was done a little differently, because you had the actual people still living in the house. So, you're a little bit more hesitant probably to look at every little thing because the sellers are right there and you're trying not to be disrespectful. So there's a couple things in this house that I didn't realize were a problem. Not a big problem, but little things, some plumbing issues. And then come to find out, guy that's in Dad's Business, TJ, he's got his plumbing company, and they came out, fixed the problem, did a great job. They were out here in like a day. I mean, it's a great referral source. I mean, Brian, I've helped some of his clients that he's referred over to me. Anytime he's asking for what the situation is on rates or anything, he has a question, I'm always there to answer. And I've gotten some referrals from him that have closed loan as well. And I'm very thankful for being a part of the group. The group's a good resource. You're not going to be able to like everybody. You can respect everybody. There's no way you can like everyone in an entire group. So I don't expect to know everybody or everyone's going to know who I am. But it's a great group and a great resource where if you had a question or you needed something, there's no reason why you shouldn't just post and say, hey, I need a blank.
Absolutely.
And someone's going to give you an idea of where to go. Or if nobody knows, someone will have a resource of somebody outside that should be part of Dads in Business to be able to get in there.
100%.
So it's just a great resource and a great tool for everybody.
Yeah. And I like one of my favorite aspects, and only because I guess maybe because I experienced this, but when you're new to business, it's almost like having mentors automatically ready to go, ready to talk to you, ready to help you, ready to answer the questions. Like I see a lot of, I'm forming an LLC. Do you guys think about this plan to do X, Y, and Z? And there's no shortage of answers and there's no shortage of help. I love Brian, I say this almost every podcast, high tide raises all ships. We all have each other's belt. And then as we all climb and grow, I feel like we bring everybody with us. And I think that he's building something that's going to be absolutely amazing. And I think that and the group's going to be what you make it. That's the other thing. I think I want to give advice.
and like I said, I mean, with so many business owners, with somebody that has so many different backgrounds, so many different skill sets, there's really nothing that you couldn't ask that someone's not going to either be able to help you with themselves or know the right contact to get to, or at least put you in the right direction. So there's no reason why you wouldn't use it as a resource.
Absolutely. Norm, we are done, my friend.
I appreciate you having me on.
Bro, thank you so much for taking the time. It was a really good. This was a good chat, especially now that I know you play video games. We got to figure that out.
Anytime.
All right, my friend. Boom. Thank you guys so much for watching. Second to last episode. Thank you so much, Norm, for jumping on the show and talking. I'm actually really excited he plays video games, and the fact that he's into it and knew exactly what I was talking about when we said Warzone came out, because that's exactly what happened. Warzone was a perfectly timed game for COVID, because without what the fuck else we're gonna do. Back to Dad's Business event, cornhole, truck bar. Search Bennett's post in there. Sign up. I'm pretty sure there's limited spots. It can't be 100 people, or maybe it could. I don't know. But Truck Bar. I've been to Truck Bar. It's an amazing place. It's free. Everything there is fantastic. The owner is in Dad's in Business, and he is a very giving person when it comes to those kind of events. So check that out. Next week is our season finale. Brian Waddell will join us. We're going to recap all the things that we've accomplished over the last 3 years, because this group, I think, is only like 3 years old. I came in when I was 13. I think we're almost at 1,500 dads who own businesses. And, reach out. The DMs are open. Speak to the people. Don't be shy, because we're all here to help everyone else succeed in being a dad, being a business owner, and overall our health. Neil has mentioned our health, which is something that I think is important. I don't think we talk about that enough. I think a health sort of conversation should start to come up. There's a lot of guys in the group who are into health, providing health options, and I think we should start connecting that a little bit more. So maybe that's something. I don't know. I feel like I'm ranting. I shouldn't be ranting. Thank you guys again so much for watching. I saw a lot of people jump in. Feel free to jump in the chat next week. Next week is Brian Waddell. So if you have questions for Brian, think about it now. We'll see y'all next week.